All righty, folks. Are utilities signaling pain ahead? Did you know that utilities are defensive? You probably did. But are they signaling pain ahead? And of course, what is the max pain that we're looking at for different options? So, Mr. Bird, what's going on?
Good morning. I look forward to your event. It's going to be fun.
Yeah, February 17th, 18th. VIPs are sold out. Added a few tickets, but yeah, 250 some
How many
odd
more?
folks.
How many more do you have left of the regular?
Right now we have about 130 left of the regular.
Okay, so that's almost halfway done too.
Yeah, almost halfway, and it'll sell out. I'm gonna guess sell out in September. It'll sell out this month.
Right, right. Okay, cool. It'll be fun.
Yeah.
Let me share my screen because I know you've got some things you got to get to, so we'll go through this pretty quick. For anybody that's interested in receiving my newsletter, just go to breakpointtrading.net, .net, not .com, .net, and sign up for the newsletter. You register your email, but you then also have to pick a pricing plan. Pick the $0 free pricing plan. Bless you.
Thank you.
And then you can get the newsletter by going out there. So what I wanted to talk about here is I got an email from a subscriber who sent me a link to this article. It says, are utilities sending a massive warning? Okay. Yeah, over the past 8 trading days, utilities have beaten the S&P by more than 6.5% and the Russell by nearly 8%. On top of that, the outperformance has been nearly a straight line up for a week and a half. So that sounds dire, doesn't it?
It does.
The other interesting thing on here says, I wish I were seeing similar move with long-term treasuries. If utilities and treasury outperform sharply at the same time, I really think it could mark the beginning of a correction.
Huh, okay.
So I decided to go take a look at this. So one thing I did was I looked at utilities and treasuries, the 10-year, side by side, just to see how they compare with each other. And in general, yes, utilities have been going up. This is a daily view. Let's look at it. Actually, this is an intraday view. Look at a daily view. You can see utilities, like he said, have been going up in a straight line. And yes, that's true. They have been going up in a straight line, but they are far away from their highs. Yeah. Right? Yep. I mean, if you look at 2023, which has been a pretty much a bull market, utilities have done this before. So this isn't unique. It happened back here in March, which March, by the way, for the S&P, and you can see in March, the 10-year went down, utilities went up. Ever since May, the 10-year has just been continually going up. Utilities came down, now starting to go back up again. Now, utilities, just as you said, is a defensive sector. So whenever the market is starting to pull back, as it is right now, and everyone pretty much was expecting, I've been saying for a few weeks, September is the worst month of the year. Yeah. The end of September, we showed it in the last session, how bad the last 2 weeks of September typically are. So I think everyone knows September is going to be pretty bad. So what do the big traders do? They rotate out of all of the things that they made money in throughout the whole year, all of the growth sectors, the technology sectors. They sell those, they rotate out of it, and they go into the defensive sectors. Yeah. And that's exactly what's happening. So utilities should be going up. This is the longer term, the weekly view down here. And this one makes it much more clear. You can clearly see the trend of utilities versus the trend of the 10-year treasury. Yep. 10-year is just continually going higher. I'm a lot more concerned about this than I am about this. So as I've always said on this channel, put things in perspective. When you read articles like that sound like they're dire warnings that the market's about to crash because utilities are going up, put it in perspective and see what that really means. Yes, utilities are going up. They should be going up. They are a defensive sector.
Right.
but they're a long way from even where their highs were over this last year.
Mhm.
So keep that in mind. This is the sector. This is as of Friday. So these are all the sectors. What you'll notice, real estate, utilities, financials, industrials, healthcare, staples, materials. These are all, staples, healthcare, and utilities are all defensive sectors.
Mhm.
Real estate can be a defensive sector as well. Financials, industrials, and materials are what I call breadth sectors. They can go either way. They're all above the S&P.
Yep.
Now look at the ones that are below the S&P. All of the aggressive growth sectors, communications, consumer discretionary, and technology. And interesting, energy went down Friday as well. Now, if we look at this on a 1-week view, now we've got the S&P down here, and the only thing below the S&P now is industrials and technology.
Mhm.
So everything else for the week has outperformed, and look what's at the top of the list. Utilities.
Oh, wow. Yeah.
So let's look at this on a rotational chart. Make
Oh,
this a
look
little
at
bit
that.
bigger.
Just screaming, lagging, deleting. Wow.
All right, we'll make it 6 weeks. All right, so now you can see energy clearly over 6 weeks is now in the leading quadrant. Financials is starting to go up. Financials do really well in the fourth quarter as well. Utilities is right here. You can see it's moving from lagging to improving. And here's the staples. These are all of these over here are defensive sectors.
Mhm.
And you can see the ones down here that have moved from leading to weakening: technology, the NASDAQ, communications, and discretionary. All of the aggressive sectors, all of the growth sectors. So this is what you should see happening at this time of the year. As we
Yep.
move into September and even early October, that's what you should see happening. You can animate these and see how they've actually moved.
That's wild.
But what's really cool is, let's just highlight utilities by itself, and let's
Oh,
see how utilities has moved. Up and down, up and down,
that's a
up and down.
wild visualization. I like it.
All right. So yes, utilities have been going straight up, but they've done that before. Watch it again. It goes up, down, up, down, up,
Up,
going
down.
up now. So now it's going up. I expect it to continue to go up through September and early October. And in fact, I expect to see the defensive sectors do well the next few weeks, and things rotate out of technology. But like I said last time in the last session, this might be the time to start putting together a list and thinking about what you want to buy when the market hits that bottom in October and it starts to rally the end of October and starts to move back up.
Mhm.
All right, so the last thing before we close is Max Payne. I also had a question from somebody about Max Payne that was watching one of our earlier
Mhm.
videos
Right.
that we did on Max Payne. And he was asking me, does Max Payne apply to ETFs like the SPY and the triple Qs? And yes, it does. It applies to anything that has options, basically.
Okay.
The way that it works is you take all of the call option premium and all of the put option premium, and you balance those to where they're equal to each other, where they balance out, whatever price they balance out at. So another way to think about that is take all the call premium and make it a plus sign, take all the put premium and make it a minus sign. Wherever those end up in the middle, that price is Max Payne. That's the price that market makers would like that symbol, that ticker, that stock to go to by options expiration, which was this past Friday, so that they don't have to pay out the premium.
Right.
So that those options expire worthless and they don't have to pay the premium. Saves them a lot of money.
Yeah.
Now, the important thing to understand about Max Payne is that it is not telling you exactly where the price is going to be. So don't think of it that way. Think of it as a directional clue of, in general, which way the market wants to move. So if we look at the Qs and the SPY at the top, you can see that the market, this was as of Friday the 8th, so this is a week earlier.
Okay.
So Max Payne put it at 349 for the triple Qs. And actually, let me go to, well, I'll do this one. See what the triple Qs actually were at. So they were at, hang on, smaller, 370.
Oh, okay.
So they ended at 370. So they were 372 a week earlier. They were at 370. Max Payne often moves into the next week.
Right.
First few days of the following week. So that's Monday through Wednesday.
Right.
And the reason for that is if somebody has a huge win, let's say they bought NVIDIA back at 400, they bought a call on it, you know, that expired in September. So they're way in the money. But they might want to actually own NVIDIA. They might say, well, yeah, it's expiring. I could just close out my option,
right,
and pocket the profit. But I would actually like to own NVIDIA. So instead of doing that, I'm going to exercise my option, and I'm going to convert my options, my call options, into actual stock. All right. So when they exercise that option, and if they do it on Friday and say, I want to exercise, I want this to convert into stock, that happens on Saturday, or really on Monday.
Oh, okay.
So all of those exercise options will happen on Monday, but the market makers still have to take the other side of that trade.
Right. Okay.
So all these people that want to convert this because they're making a profit, the market makers have to sell it or sell it short on Monday in order to balance the market. So that's why Max Payne carries over into the following week many times. So it's interesting to track. It's not something that I put a lot of stock on. I just think it's interesting. Right. More than anything, it kind of gives me a sense for what the trend of the market is. You can figure that out without having to go through this exercise of plus and minus all the premiums. You can see right here, the net call put premium is what is that? 2 trillion for NVIDIA?
So. Yeah, look at that.
$2 trillion for NVIDIA. Is that right? There's 100, there's 365 million, 2 billion, 2 billion.
2 billion, yeah.
2 billion for NVIDIA. That's what the market makers stand to have to pay out if these don't expire worthless. Now, what did NVIDIA end, just out of curiosity, on Friday? 439 is where it ended. So NVIDIA, Max Payne was 373, but 439 was certainly in 1 week was much lower than the 455.
Right.
So directionally, this was right, but it's never really going to get to the actual price.
Right.
This is the price where there's equilibrium between calls and puts. Okay. All right. And you can go all the way to the bottom of this and see which ones are on the other side. You know, J&J down here, that one was supposed to go up. Let's see what happened to it. I mean, not much went up last week. J&J ended at 161, and this was at 160. So directionally, it went up a little bit, but certainly not 7%. Now, this is going to continue into next week. Right. So you can't really make that comparison until sometime probably next Friday. But that's what Max Payne is. It just gives you a sense for the direction of where the market might go based on what market makers are doing and what's happening with options. Nice. One last thing I'll leave you with is the leaderboard from IBD. They are still showing an uptrend under pressure. And on my website, you can get this front page even if you're not registered or not subscribed or anything. And I put the IBD status right on here. So uptrend under pressure. And I put some of the charts, if you just want to look at charts for the NASDAQ, for instance. You can do that here without even registering. But look at how the NASDAQ went down on Friday, the big options expiration day. There's an example of max Payne. There's a directional move, and this probably will continue into next week. So what we need to watch here is it going to take out this support level down here?
Okay.
I don't think it will. I think it's going to come down to it.
That's a heck of a drop.
Around.
Yeah.
But if it did take that out, that will complete this head and shoulders, which has reappeared now. So we'll continue to watch it. But those charts are free for anybody. You know, these 5 charts here in the middle.
Nice.
If you just want to look at those, you don't need a subscription or anything for that.
Dan, I appreciate you, man.
The leaderboard here said a couple interesting things. You know, that said that, you know, the Dow Jones reversed below its 50-day. Microsoft was the worst performer, and Walt Disney was the best.
Wow.
How about that?
Disney was the best. Oh, okay.
Yeah. So it talks about the Fed meeting next week. These are the ones that are reporting: FedEx, Darden Restaurants, KB Home. KB Home. And then the chip equipment is lagging right now. And if we look at the chips, the semiconductors, you can see right here, they hit this Fibonacci level right up here.
Yep.
Hit it multiple times, kept trying to break through it, but couldn't.
Yep.
Now it's getting rejected. So all of these chips, AMD, NVIDIA, Marvel, all of them are going to start to come down. And I think they will continue to come down through September and October. And these are the areas that you might want to watch sometime around the middle of October if you want to start buying things. Because if this comes down to its 50-day moving average down here,
right,
then that I think is when it's going to start to rally. And when it rallies, I think it's going to rally into the end of the year.
Okay.
And software is the other one. Software, same kind of thing. It didn't quite make it to its high back here, but it hit this Fibonacci level and now it's getting rejected, starting down again. But it's still above its 21-day moving average. So in general, the market, even though it feels like it's gone down, it's actually holding up pretty good. It's holding up above its 21-day moving average here. And as long as it's above its 50-day, then it's positive, then it's bullish.
Nice. Very, very cool. Well, this ought to be fun. I can't wait for next week to figure out what the Fed did. See if the last 2 weeks of September are as rough as historical averages. Dan, thank you very much.
All right, you bet. For those that are interested, just go to breakpointtrading.net and register, and make sure you subscribe to the free one, free newsletter.
There you go. Thank you, buddy.